But if you looked at Tesla today through that lens, is that stock a buy with a market cap north of $800 billion?
The short answer is yes.
So let's talk about some numbers. So we're looking at 2Q. We already have deliveries. We know that from the fourth quarter of 19 to the second quarter of this year, Tesla's market share in Europe has fallen from 33% to 15%, even down from 1Q. In China, their growth market, from the first quarter of 20 to the second quarter of this year, their market share has fallen from 23% to 11%. So in the two of the three largest global markets where you have competition, Tesla is ceding significant market share. Their biggest credit customer, Stellantis, keep in mind, Tesla has never made money in any single year, excluding credit sales.
Any chance that this surge in crypto could just give an additional, I know you're not seeing a boost, but give an additional boost to Tesla's stock at earnings?
That's a great question. So I want to look at my notes here. So let's just get into the numbers. So again, we think there's going to be a roughly $200 million benefit to their gross profit from selling more cars. However, in the quarter, the way you account for Bitcoin, they're going to take about an $85 million charge on the Bitcoin investment they have in the second quarter. In addition to that, we think that the credit sales are going to be 200 million less than what they did in 1Q. And we think there's going to be a margin hit for them actually having to produce Model S and X cars in 2Q versus not producing in 1Q. So the number, the kind of back of the envelope number we're looking at, non-GAAP net income, we're seeing a number close to 985 million, whereas the street's at 1.1 billion. So to your point, Bitcoin is actually going to be a headwind for them in 2Q when they report numbers after the close. So we think that's actually going to work against the company, not for them. With respect to today's move, I think people want to see how it moves through the quarter, because the way you account for it is you market to market at the lowest price any individual day in the quarter. So one day's move, we don't think is going to be big enough to really help the company.
Deliveries from Tesla, 185,000 in Q1, over 201,000 in Q2. What number would actually be impressive to you and for kind of meet the expectations that you have and also investor expectations?
Yeah, again, that's a great question. Let's take a step back. So look at Tesla trading at about 100 times earnings, 100 times earnings versus the auto industry average of about 6 to 7 times earnings. That's not a mistake. That's real. So you think about it. Last year, Tesla sold 500,000 cars, right? VW, who's Tesla's valued at a multiple, right? Their market cap is a multiple of VW, sold 13 million cars. So already in this valuation, Tesla is being valued as if it's growing its deliveries 100, 200% per quarter. That's what the valuation suggests. So going from 185,000 cars to 200,000 cars, while impressive to some, if you look at their valuation, I think is a disappointment. So we need to see this company get to multiple millions of cars sold per year to justify even half of its current valuation, and it's just not there. And I think as the market realizes, Tesla, when they see competition, China, EU, where they're ceding significant share, as the market realizes they're no longer going to get these credit revenues that they've gotten that have been the bolus of their profit, I think the valuation is going to come down tremendously. Number one, I agree. I think market share is very important. With respect to the email, in the middle of a pandemic with chip shortages, the consensus of earnings estimates on Tesla and shipment estimates have been so accurate. I mean, it's kind of mind-baffling that the numbers could be so accurate. Essentially, what we think could be happening is Tesla is pre-publishing its numbers. Tesla, like analysts, we don't get those numbers, and that's why the analysts are so accurate. I think what's most important is credit sales. Keep in mind, without credit sales, in no year since they've been in operation has Tesla been profitable, and only 4 of their 29 quarters have they been profitable. 5 straight quarters of losses, including last quarter, excluding credit sales. So they just lost their biggest credit customer, Stellantis. So we don't know when that dynamic is going to fully impact Tesla's numbers, but we think you're going to see a fall in credit sales, right? On that number that they leaked to select analysts, they have credit sales dropping from 518 million to 400 million. We think those credit sales will drop even further in 3Q, and we think color around that is going to be crucial. We just hope someone asks the question. So we think that, profitability going forward is going to look much worse. And keep in mind, Stellantis said we're walking away from Tesla. Unexpected, beginning of Q2, they said we're done buying credits for Tesla. Yet earnings estimates across the board, analyst earnings estimates did not come down. So we think there's big disappointment risk in the back half. And we think that market share loss will also be key on the call tonight. Yeah, so with respect, that's a great question. So with respect to the Semi and the Cybertruck, keep in mind, Tesla did this big battery day, right? There was a huge, multi-year build-up to battery day. And then at battery day, they didn't need to introduce a battery. So keep in mind, right, the Model S Plaid, the big promise around the Model S Plaid was that it was going to have 500 miles of range, right? Elon Musk has been saying for a long time they're going to put out a car that has 500 plus miles of range. And then when they put out the Plaid, all of a sudden, hey, we're not going to do that car. We're going to do one that has 300 miles of range. Don't worry about it. The issue is the 4680 cell structure battery is not ready. You're not even, there's still an essentially concept stage of that battery. Keep in mind, Tesla does not make batteries. That's a big misconception among investors. They're going to buy that battery from Panasonic or LG. The Panasonic and LG have said we're still in essentially, pre-production stage, and we don't know if we're ever going to get to mass production. Without those batteries, I don't think you're going to see a Semi. I don't think you're going to see a Cybertruck. Whatever does come out with respect to the Cybertruck, we think it's going to be much more expensive than advertised, much more than $40,000, and have far less range than Tesla promised. And we don't think it's coming until at the very earliest some point next year. So we think there's disappointment there. With respect to SpaceX and all these other companies, keep in mind, SpaceX loses money. We haven't seen their financials, but they lose money. And they said when they are profitable, they're going to spend that money to get to Mars. So another company of Elon Musk's that without public help, not profitable. So, but I think the focus is going to be on Tesla. And one other thing I want to highlight, right? The GM fires. People have said that's a positive for Tesla. Here's the problem. GM had 8 cars catch on fire spontaneously, 8, and they recalled every single car. We found a contact this weekend who has highlighted 200 plus Tesla fires, Tesla cars that have caught fire either spontaneously or via accident, and they haven't recalled one car. So we think that's actually a big risk for the company that regulators may be forced to look into. That could be, financial burden.
But if you looked at Tesla today through that lens, is that stock a buy with a market cap north of $800 billion?
The short answer is yes. The reason is that I think look, I bought Tesla in 2014 or 15. I was one of the largest owners of the convertible debt. I felt that was the best margin of safety way to bet on Tesla. It's turned out to be an enormous winner. And I really believe in what Elon is doing. I think he's the most important entrepreneur of our lifetime. It's taken people 15 years to embrace that they're going to be now a legitimate car company. But when I underwrote the investment, my bet was on something bigger. And I think that Elon is well past building a car company. And I think it'll take another 5 or 10 years for people to figure out what this next arc of innovation is. And what that is the deregulation of energy. If you look under the hood, utilities spend tens of billions of dollars, hundreds of billions of dollars a year all around the world on CapEx. They are completely regulated. They feel completely safe. They feel like they can issue debt ad nauseum. They can cause all kinds of damage to the environment or otherwise. Look at PG&E and still come away unscathed because they're protected. Except that something is happening that nobody forecasted, which is the complete bottoms-up disruption of energy. And that's the only way that this thing is going to get deregulated. It's not going to be by law or dictate. It's not going to be, a big monolithic competitor. It's going to be because every home installs hydro panels, solar panels, batteries, and then software that basically allows them to live off the grid. And then eventually pump their excess energy into battery solutions and other things that are controlled by cities and towns and governments, who then in turn will turn off their usage of peakers at a minimum. And then over time, will have very different characteristics of usage from traditional utilities. That is what Tesla is powering. That is what allows it to be a multi-trillion-dollar company. So does it have the same return profile as when I bought it at what is it equivalently now $25 or $30 a share? Well, obviously not. But can it be multiples higher than where it is today? Absolutely.